Good morning and welcome everyone to our daily global markets call. Today is Monday, 24th of October, and we start with Asian session update from Christopher in Singapore.
Good morning, everybody. We have seen risk appetite generally supported in Asia after U.S. election polls over the weekend show a further slide in Hillary's favor. In China, the 205-member Communist Party Central Committee is meeting this week in Beijing, and the market is optimistic that we will see new words from the government on infrastructure spending and also a possible change to the ownership structure of SOEs that are dominating the Shanghai Composite Index. We see a pretty nice rally today in the Chinese market, up 1.3%. In Japan, we have a few data points today, all better than expected. We see a trade surplus of 498 billion, above consensus, and exports was down for the 12th consecutive months only by 6.9%, where the market expected an 11% decline, so a little bit better there as well. In the Nikkei, we see a modest rally today, but it's actually earnings speculation there is big. It's a big week for earnings, and we see bigger two-way moves. Astella Pharma rose after the company reported a 20% increase in first half profits, and also news that the US FDA has approved its or updated its product labeling of a drug, cancer drug called Xtandi, and this shows that Xtandi has a better effectiveness compared with the alternative treatments. Nikkei again in the headlines. Nintendo again in the headlines today. Was down 6% Friday. Today it's down 5%. It's a report in the Nikkei newspaper that is speculating in a much worse result than the market currently expects when the company results on Thursday. Friday the fall of 6% was after the company unveiled a new gaming platform that did not impress the market too much. Also worth mentioning, the offshore yuan is still sliding towards a fresh low. Chinese policymakers there accepting they are willing to allow further declines because of the ongoing decline in Chinese exports. We're hitting 6.7837 today, and this is the lowest level for yuan since September 2010. Finally, in the G10 space, it's really rather range-bound this morning. Not so much to talk about. The cable did a little early decline, but that's the most notable move today. And the DXY is continuing to edge a little bit higher after San Francisco Fed Williams on Friday said that he supports a case for a December hike, and saying that it's better to get back to a gradual pace of increases sooner rather than later. Tonight we have another 4 Fed speakers, so a lot of potential moves there. And BOE's Carney is talking tomorrow as well. Finally, I promised just to mention a Saxo strat that we put out this morning. Our strategist here, KVP in Singapore, he is seeing the Italian MIB index looking overbought, and believes the market is complacent ahead of the upcoming event risks, such as the Italian referendum vote on the 4th and December, and the ECB meeting on the 8th of December. And with that being said, I will hand it over.
And I think that's to me. Thank you very much, Chris. Take a look at some of the commodity markets this morning. The news over the weekend has primarily been oil-based, oil-focused. Russia met up with the Saudi, Russia's energy minister met up with the Saudi energy minister at the weekend, and again the wordings from the meeting continue to be supportive, but obviously no numbers, no facts just yet. They said they've reached common ground on a possible oil deal, but Iraq is probably the reason why we're a bit lower this morning. They came out out yesterday also saying that they really want to be exempt because they're fighting ISIS at the moment. They need the money, and that's Iraq is really one of the producer which has increased production the most together with Saudi Arabia over the past 6 to 9 months, and we already know that Iran doesn't want to play ball either. So really the question is who's going to join and by how much, and that will keep the market in suspense over the coming weeks. The rig counts in the US rose by 11 last week to the highest since February, and we saw funds continue to add length to the market. But I'll just show a couple of slides later on that. In the gold market, it's holding up reasonably well once again. We've seen gold price in euro retrace the first 38.2% of the July to October sell-off. It's currently at 1163, and 1170 was really the breakdown area for that particular cross back in early October. So that is an indication that the dollar strength we've seen so far has not translated into gold weakness as we've seen in the past. So gold is putting up a fight here. We did, however, see quite a big redemption last week or last Friday in into peace, 17 tons. It's the biggest one-day redemption since July 2013. So there probably will be some speculation today what caused that and who was doing that. But we need a break above 1280 really to see this market move further. Until then, we're still in range bound. Just on the euro dollar, looking at 108.91, that's today's pivot. We're getting pretty close to that. If we see a breakthrough there, we could extend up to 109.23. That would obviously give the market a bit of a lift. Copper is interesting, and and we've been on a downward move recently, and I think on that I actually want to just switch to the next screen here, because what we see in copper that funds have been finding it incredibly difficult to get the direction right this year, and it's also in reflection the market's been range bound for the past year. Last week we saw another big switch from long to short. The net selling that was actually the biggest on record since 2006. So there's a lot of new shorts coming into the market here between 208, 218, and 209. So we really need to we need to see if we can break this 208.50. That will take us down to 200. And if we start to see the market move higher, then there could be some short covering coming in. Gold, the record selling pace slowed down last week. We did see selling for a third consecutive week, but the record pace from the previous 2 weeks were not repeated, and we're seeing the short base starting to climb a little bit. So the net long is at the lowest since March 1. And just look at crude oil, because we do have this quite elevated net long in the market in anticipation of an oil deal and higher prices to come. What I'm focused on in this week's data is basically that the short basis can continue to collapse, and we've seen on 3 previous occasions since 2014 that once we came down to around this level here, we did start to see a response to the other side, most often triggered by obviously the price started to move lower again. So we have a very small short in the market at this stage, and that leaves the markets again exposed if we should see some weakness, because who's going to buy into that weakness when the short basis is so reduced as it is right now. Finally, on the FX, dollar was in demand for a 5th week. It really has been in demand ever since the ECB signaled that it was stepping back from additional quantitative easing. The rise in dollar demand last week was driven primarily by selling of euros and yen, to a certain extent offset by short covering in sterling and especially the Mexican peso, as the Clinton victory looks a bit more certain. But also in the euro, what we can see that both the long and the short base is rising. So the gross long, so the combining the shorts and the longs, is at a record. So euro is not just going to stop here and do nothing. There's a lot of pent up positions in the market, and that's going to I'm pretty sure going to ensure continued volatility as we move towards these risk events over the coming weeks. And I think I've talked more than enough, so I'll pass you over to Michael on bonds.
Thank you, Ole. In the bond markets, the jump in yields that we saw last week proved to be a short one, and in technical terms, it seems like we had a clear rejection of this Brexit level in the 10-year German yield again. So we are now back into negative territory, and we actually have bunds trading even higher this morning. So we are now down to 1 basis point in a negative 10-year German government yield here. So it's pretty clear that the high correlation between bonds and equities works both ways. So essentially, that means government bonds are likely to provide a very small shelter in case of turmoil in the markets, especially if this QE tapering rumor resurfaces, or if the ECB fails to extend the QE program in December. Otherwise, for now, until then, focus is going to shift to the US. The most important data numbers this week is probably going to be the US GDP numbers on Friday, and that's of course in context of next week's FOMC decision. There's of course also the US election 2 weeks ahead to as well. But for now, it seems like the market is pretty comfortable with a one hike scenario. Not at this upcoming meeting, but surely at the December meeting. The latest is priced at 60 days. Closer to our own borders today, in Spain is going to see some attention. Over the weekend, the Prime Minister Rajoy finally managed to convince the centre-left party PSOE to back his government for a second term. So this 10-month period of no government has come to an end. Also be able to avoid a third election, so that should provide some relief to Spanish bonds. If we look at the charts here, it's difficult to say that Spanish bonds have performed badly, both in absolute terms. Spanish yields this year. Also relatively to Germany, we've seen the spread to Germany contract throughout the year, but that's obviously because of the much heavier forces at play here, namely central bank reduced tightening of any credit-related spreads so far this year. But nevertheless, we should see some outperformance today in Spanish bonds. Might also feed into as well. But with that, plenty of stuff to look at this week. I wish you a nice day ahead, and thanks for tuning in this morning.